One of the biggest banks in the US has collapsed. Investors and traders are panicking. The stock market is crashing. But what does this mean for us? Surprisingly, guys, despite the negative sentiment out there, there may actually be some very interesting short-term buying opportunities that may arise this week that you guys need to be aware of. So this is what we're going to discuss in today's video, guys. We're also going to go through this chart over here that we introduced to you last week, guys. And my, oh my, were we right about this? We were 100% spot on with this. But we need to go through in today's video to see what's next for the S&P 500 and for the stock market in general. We're also going to discuss, guys, the fundamentals of why the Silicon Valley Bank has collapsed. And also we're going to go through back in time and see what happened when the last bank has collapsed at the last financial crisis, when Lehman Brothers have collapsed. Did the stock market go down straight away when the news hit? Well, what actually happened? Because this may have ramifications on what will happen this time around as well, guys. It's going to be a very, very important video, guys. Make sure you watch until the end. And as always, guys, if you do enjoy today's video, please give this a like. It does help us a lot, so please hit that like button. And if you do enjoy today's video, please share it with anyone else that may also find it useful. And guys, if you are new to the channel, please consider subscribing. We do bring out the latest stock market analysis outlook every single Monday morning. Now, guys, we did introduce this chart to you last week. This was the S&P 500, the weekly chart of the S&P 500. And we did say that in the past, over the last year or so, every single time we had a positive week within a leg lower, okay, this was followed by new lows in the S&P 500. This has happened over here in May, also in September last year, and we did discuss the possibility that last week or the week prior to last week was just a one-off, just to suck in more buyers, and that we were looking for new lows, okay, or for more downside pressure. And that's exactly what we got last week, guys. We had a lot of negative sentiment last week that pushed the market lower. So does this mean that we are going to see new lows in the S&P 500 over the near term here? Now, guys, this is a very strong possibility. We also discussed over the last couple of weeks that we needed a catalyst to bring the market lower. And the catalyst came last week with the collapse of the Silicon Valley Bank, guys. So what I actually want to go through now, before I go into the technicals of the charts here, guys, is just to go through some fundamentals and explain why the bank has failed and who were them, okay? Because I think that's very, very important before we go any further. So, guys, the Silicon Valley Bank was the 15th largest bank in the US by deposits, and actually held over 210 billion in assets, okay? The failure of the bank was actually the second largest in US history. The first one was the collapse of Lehman Brothers in 2008 that caused the financial crisis back then, guys. So this is very, very important. Every single financial crisis that we had, well, the last financial crisis was a failure of a bank, and this is exactly what happened now. Now, why did they fall, and who were they? Okay, first of all, well, over 95% of the bank's deposits, guys, first of all, are not insured, okay, by the FDIC. They only insure the first 250K that you deposit with the bank, which means what? That's over 160 billion worth of customers' money, deposits are not insured. And if those customers are to lose their money, okay, those 160 billion, that will cause a contagion all over the world, guys. So this is very important, okay. More importantly, the Silicon Valley Bank, okay, it's the bank of new startups, okay. If you are a venture capitalist, or if you are a new startup, you will go to them and they will fund your project, okay. Now, uh, they funded over 65,000 startups. So they are very, very big, guys. Now, those 65,000 startups, they could miss payroll, okay, because their money is now tied up. They can't access their money anymore. And if that happens, okay, that will cause a big contagion, okay, all over the world. Now, what did they fall? Okay, very, very importantly, why did they fall? Well, first of all, they used the money that they had. Okay, so those customers' money, they used the money to do what? To buy government bonds. Okay, with a fixed interest rate. Now, as the Fed has been raising interest rates over the last couple of months, they lost, okay, over 80 billion in bonds. Okay, why? Because they bought government debt with an interest rate of 1.5%. However, guys, as you know, the interest rates are now over, or they're leaning towards over 5%. So obviously, when you buy at 1.5% and it goes to 5%, you bought at a fixed interest rate of 1.5%. And now the interest rates are over 5%, you are doomed to lose money. And that's exactly what happened. Now, they did come up with this. They tried to basically raise capital last week. But when that happened, when the news came out that they were struggling, that caused a contagion, and no one actually wanted to fund them. Hence, they collapsed on Friday morning, and now they are in the hands of the government. The government actually controls them. But guys, what does this mean exactly? Well, first of all, guys, let me just go back to this article over here, because the CEO, okay, and other board executives, they sold 3.6 million in shares, okay, just before the bank's failure. They knew the bank was going to fail, so they sold all this stock. And actually, they are now millionaires and they can do whatever they want. They don't care about it, okay? So you can see how those executives, okay, they knew what was happening. They sold their shares, okay, and now it's in the hands of the government. You deal with it. If you want, if not, let it collapse. We don't care anymore. Okay, so guys, those failures, okay, are very, very dangerous, because first of all, there's two ways to look at it. Now, if the government intervenes and you know, bails them out, bails the bank out and say, listen, we'll give you as much money as you need just to carry on. Well, what does it mean? It means that those executives, they can keep committing fraud and make risky investments because the government can have, you know, has their back. So that's not really the way to look at it, guys. So that's a very dangerous way to look at it. So the government now needs to punish them and say, listen, we're not going to bail you out. And if you, they should go to jail. They should go to jail for doing that. Okay. But then again, it is what it is. Moreover, more than that, guys, okay, so we have a lot of firms, okay, this is just from Canada. They have over 90% of the cash tied up in the Silicon Valley Bank. They can't access their money anymore. They have actually more than 55 million, okay, in the bank. So if they can't access their money because the money is gone, then they will go bankrupt. So that's the contagion effect that we are talking about, guys. Now, we did have a rally overnight. So the stock market opened and then instantly we had a rally. Why did we have a rally for? Well, because the Fed came up with this statement. They said that the Silicon Valley Bank depositors will be protected. So not the shareholders, but the depositors. If you did buy shares in the bank because you follow Jim Cramer, we said a month ago that you should be buying the bank because it has a lot of potential. You lost your money and you'll not be bailed out. And that's a good lesson for you. Okay, be careful who you listen to. That's very, very importantly. But second of all, okay, if the Fed bails them out, then all the depositors will be protected. All those people, all those businesses that have money in there, okay, will be able to access the money and get their money back. That's positive, guys. However, that is not positive for everything that's going on at the moment. The Fed needs to keep raising interest rates, and it needs to bring down inflation. This is not good for them, because what they are doing now, they are printing more money, and that is not the way to do it, guys. Okay, that is not positive for the stock market. So in the short term, we may see a bounce. However, looking at the long term, that we will see new lows in the stock market because of this. So don't think that just because the Fed is going to bail them out, that's it, everything will go back to normal. No, this is just the beginning, guys. More banks are likely to fall from it, and we do have the news this morning that the First Republic Bank, okay, in the US is down 60%. So they may have a lot more banks who may be impacted because of this, so watch out. Now guys, before I start, I just want to go through what happened last week in the S&P 500. And guys, last week we did discuss the possibility that we had this gap over here, and we said that as long as we're able to hold and not close above the gap, then we are going to see new lows. And we did target this we were targeting, guys, this daily IC in here, and the price played in very well. No, sorry, this daily IC here at 3850 or so. We were targeting that was the target for the week, guys, and that has played in very well. Now what actually happened? Well, guys, we did discuss the possibility that at any point we close below the lower expected move for the week, dynamic hedging will kick in, which will encourage more selling. Selling encourages more selling, and the people that were long, they have to cover the longs and sell, and that will cause that big crash that we were fearful of. And that came in with the news that the Silicon Valley Bank has officially collapsed. So that's what actually happened last week. So those expected moves, guys, if you don't have them on your charts, put them on your charts, because they are very important, okay? And they are levels that we need to be watching throughout the week. Now, one last thing, guys, before we go into the technicals, and that will be it, is just that what economic news are there this week to be aware of. Well, first of all, guys, we have the CPI data. Now you wanted things to be very interesting. Well, there you go, you got CPI data. Now the jobs report last week came in very hot, which basically suggested that the Fed has to raise interest rates by higher than anticipated. We talked about 25 basis points, now they're talking about 50 basis points. The only reason they will raise by 50 basis points if the job report comes in hotter than expected, which it did, and inflation comes in hotter than expected, which it might. So if inflation comes in hotter than 6%, guys, okay, and 0.4% month over month comes in higher than this, they may be forced to raise interest rates. Now the only reason they may not do that, okay, sorry, raise it by 50 basis points, the only reason they may not do that is because of the contagion effect of the SVB. So that's something to watch out. Again, if inflation comes in hotter than expected, guys, I think we'll have more bad news and more downside potential for the stock market. So be on guard, watch out for this, along with any news about SVB and whether they bail them out or not. Watch the CPI data on Tuesday, and watch, guys, very importantly, the retail sales on Wednesday. Very important. Now, guys, before also one last thing, and then we go into there's so much to talk about in this week's video, it's unbelievable. But before we go into this, guys, don't forget about daylight savings. So if you are in the UK or Europe, okay, just remember that the US stock market are going to open, okay, this week and the next week an hour earlier. They're going to open an hour earlier, and they are going to close an hour earlier as well. So watch out for that. Make sure you don't get caught in that in the daylight savings, summer daylight savings. Okay, so be very careful on that. If you're in the US, then you should be aware that everything has changed based on where you are actually in the US. Okay. Now let's start off by looking at the technicals, guys. Okay, so let's look at the charts and discuss the technical analysis that we can see on the charts and the things that we should be looking out for the week ahead. And guys, we did discuss at the beginning of the video the possibility that we may have a rally or a short-term potential buying opportunity. And guys, let's just go back to 2008 when the Lehman Brothers have collapsed. Now, guys, if I show you this chart over here now, when Lehman Brothers have collapsed, okay, this was all the way over here at the end of September or during September. We did not collapse straight away. We actually had the week following the news that they have collapsed. We actually had a positive to neutral week over here, guys. Okay, and straight after that, the contagion effect took place, and then we crashed all the way lower, guys. So bear that in mind that this week we may also not necessarily collapse, guys. Okay, we may have a short-term buying opportunity, which will be followed by some long-term selling opportunities, guys. Okay, so be aware that this week we may not actually crash all the way down just because of the negative sentiment that is out there, guys. Okay, so there's a lot of negative sentiment out there. People are expecting it to crash. When something is expected to happen, what normally tends to happen? The opposite tends to happen. So be very, very careful out there. Now, where are we in terms of the charts? We are right back at the trend line. Okay, we are retesting the previous trend line here, guys. This trend line has been acting as strong resistance over for the whole of 2022. This was broken in January, okay, of this year, and we are back at it retesting this. Are we going to have a bounce from here, a short-term bounce, followed by more downside pressure? Now, this is what we're going to look at this week, guys. Okay, now we have cleared the liquidity that is resting below here, and as it stands, we've had a rally overnight. We had a pretty interesting rally overnight because of the news that I just outlined, and as it stands here, guys, we may have a potential double bottom as long as we manage to rally and close above this zone here. Now, guys, in terms of what we should be looking out for this week, there's two potential things that I'm looking at. First of all, if we are to see more downside pressure, the levels that I'm watching, guys, would be first of all down here. Okay, no, will actually be down here. Okay, where we have the lower expected move for the month of March. We have plenty of liquidity that is resting below here, and we also have the lower expected move for the week. 3,750 is the level I'm watching. So if we do break down lower, guys, okay, watch this level here. Watch 3,750. Okay, that will clear the liquidity that is resting below those lows over here, and that will create some nice buying opportunities. So if we do see a lot of downside pressure at the beginning of the week, perhaps following the CPI data, okay, then it comes to 3,750. Monitor to see what price wants to do around that level. We may see some nice buying opportunity around that level, guys. Okay, that's going to be very, very interesting. So we have this liquidity that is resting below here, which sits at 3,740. So don't be surprised if we do go lower, wick down, clear the liquidity, and then have a nice bounce from there, guys. Monitor that. I think it's going to be very interesting, especially if we do see downside pressure. If we don't see downside pressure, guys, I'm looking at the charts to have a nice bounce out of this trend line here, where, well, as you guys see here, okay, we cleared the previous low over here. So first of all, we came into the upper expected move for the month, and then we had a nice move lower from there. Okay, so this should have been a beautiful shorting opportunity for you guys. Okay, as it stands, we made a low, we made a lower high, we made another lower low. So I wouldn't be surprised, okay, if price wants to come this week and come into this this daily IC in here, which is right where the upper expected move is for the week. Guys, if you do see that there, okay, then that will create a nice shorting opportunity for us if price gets there at some point this week. Again, guys, we're looking for, if you do see a nice bounce from here, okay, again, is very short-term buying opportunity, because the reasons for downside pressure are intensifying now. Okay, guys, so don't think that even if we do have a positive week, that's it, we are going to all-time highs. Be very, very careful, guys. Okay, this contagion risk may go even higher. Okay, as it stands, you can see, if you're looking at the 8-hour time frame here, we have just cleared the liquidity. We are right here. Okay, we've got plenty of liquidity sitting above here, so we wouldn't be I wouldn't be surprised if we do go and clear that before we move any lower. Okay, guys, so watch that over this coming week. If we do go higher, we're looking to sell from this IC here, right where at the upper expected move, and if we do go lower, 3750 is the level to watch. Next, guys, UK 100. Now, my, oh my, we were right about this. We did say last week that we were bearish as long as we are able to hold and not go above this 3960 level or so. And guess what? We never went above it, guys. We actually crashed all the way down, and we are approaching our first target. We just said we have two targets that we're looking at. First of all, we have this daily IC in here where we may see a nice bounce from, a short-term bounce. And ultimately, we are looking at this liquidity to be clear over here and coming to this daily IC sitting at 7180 or so. This will be our ultimate target for the UK 100. Then we have to see where the price wants to continue, or we may have a nice buying opportunity. If you're looking at a 4-hour time frame, guys, we are right in the 4-hour IC. We have a nice another 4-hour IC sitting right here, right at that daily IC. So if price wants to come here, have some nice consolidation here, we may get a nice bounce from here, short-term bounce before we get our ultimate level of 7180. As it stands, guys, I can see a bounce. We are getting positive divergences here, so a bounce may not be out of the question. Short-term bounce, but nonetheless we may see a bounce. We have liquidity resting above here. Preferably, I don't want us to close above this level here, guys. 7660, guys. I don't want us to close above this level here. Okay, so preferably if we do see a bounce, we may go and clear that, but preferably I wouldn't want to close above that to still see more downside pressure in the near term. So watch out for that, guys. That's going to be very, very interesting. But as it stands, we are going lower, okay, making new lows with positive divergences. So don't be surprised to see a move higher from here. Next, we get the DAX. The DAX, guys, again, hasn't been all that. We discussed that in last week's video. All we've done last week is clear the liquidity, and this week we managed to go all the way down and clear the liquidity from the sell side here. And we are back within this annoying range over here. Now, what I'm looking for, guys, I'm looking for price to come all the way down into this daily IC, where I would like to see a bounce. And ultimately, I would like price to come all the way, clear the liquidity below here, and come into this daily IC here. That would be a beautiful long-term buying opportunity, perhaps. Okay, so 13,650 or so is the level that I'm watching as a long-term shorting opportunity. As it stands, guys, now we've cleared the liquidity. I'm looking to see whether we are able to close above, below the 50 EMA here. If you close it below the 50 EMA, I'm looking for that to act as resistance and then come into here as a first target into this first daily IC. If we are to look here, guys, all we've done was some buy side liquidity here, but I don't want price to go and close above this level here, okay, which is 13,255 or so. I don't want us to go all the way back there. So as long as we are able to maintain this level here and not close above it, then I can see us making new lows either this week or in the next couple of weeks, guys. Okay, we are making new lows. Okay, no divergences as of yet. Okay, but we may get that with more downside pressure. We got the liquidity resting here now. I don't want this to be cleared as of yet. To be honest, I want price to, as I said, don't go above the 13, the 15 to 50 level, and I want us to have a short-term bounce perhaps. Okay, ultimately new lows either this week or in the next coming week, and I don't want this liquidity to be taken yet. This will be taken at some point during the year, but not yet. For us to be bearish on this, we don't want to see a lot of buying pressure here. Okay, we want to see any buying, any rallies that we see, guys, on here. We want them to take them as shorting opportunities. Okay, to use this rally to do what? To sell into. Okay, that's pretty much what we are looking on for as of now. But again, guys, we haven't been anywhere, okay, on the DAX since January, okay, mid-January. So I want to see a candlestick close at least on the 4-hour below this, and then more continuation to the downside. As it stands, we haven't done a lot. We're just playing up and down, clearing liquidity above and below. That's pretty much what we're doing at the moment. Next, US 30, and guys, we had a nice trade on this last week, and if you're part of the Discord community, you should have taken advantage of this, because this was just a beautiful trade. Now, guys, all we did here, okay, we failed to make a new high. We broke below, made a low, lower high, and we made a new lower low. We are just about to clear this liquidity that is resting below those lows. After that, I can see us having a bounce. If you actually look at the 8-hour time frame, I can see us having a bounce to this 8-hour IC here, consolidate here, and we are looking for new lows. We are making new lower lows here on positive divergences, so again, don't be surprised if we do get a nice bounce, short-term bounce. We use that to sell into for the time being. Okay, guys, what are we targeting? Well, guys, as you can see, there is no more support. There's nothing resting here anymore. So the target for now will be 13,500 or so. Okay, this daily IC in here, that would be the target for the time being. But one thing that I want to point your attention to, look at those lows. Look how clean those lows are here, guys. So I think that over the next coming weeks, we may see new lows in the US 30 in the Dow here, okay, to clear those lows. What do we do if we do see that? We use them as buying opportunities, guys. We don't panic. We don't start to sell everything. We use that as buying opportunities. Okay, we've been preparing you for this crash. We said that we'll see more downside pressure coming into 2023. Okay, we did have a rally, but guys, remember that the bigger the rally, okay, the bigger the fall. Okay, so don't think that just because the market has been going up like crazy, it's not going to fall as hard. It will fall as hard, guys. So if something has been going up hard, like the DAX has been, okay, then it will equally fall as hard, okay, when the time comes. So I'm looking at those lows as a potential end target for this year, while I'm looking to build up long-term buying opportunities. Okay. Next, guys, we get the NASDAQ, the US 100. Here, guys, this has been the strongest out of all, even though we had a nice double top here. Double top has played out quite nicely. We've made a low, lower high. We're trying to make a new low here, clear the liquidity that is resting below here. Now, as ultimate target here, guys, I'm looking at, for now, okay, I'm looking at this daily IC here, sitting at 11,450 or so to be hit. Okay, so that would be the target for the time being. I still see a lot of downside pressure. However, as it stands, we are in this 8-hour IC. We are consolidating here. We've just cleared that liquidity, so a bounce could not be out of the ordinary. Last week we discussed the possibility that we like to see that gap not be filled and act as resistance. That's exactly what happened, and we crashed from there. So that would have been a very beautiful trade. Now we do have those equal lows here, okay, very clean. So I can see them being taken. And if we do see them being taken, then I can see they're coming into this 8-hour IC here, or potentially coming to this gap. Coming to this gap, and this gap should act as support, guys. Okay, so if those lows are taken, those lows are taken, the liquidity is being cleared from here and from here. Watch out for this gap here acting as support. Okay, and that will provide us, if it does act as support, a nice short-term buying opportunity. As it stands, we may have a double bottom, or we may actually have, guys, if you just look at this, we may have a head and shoulders. Okay, so if it is to be the right shoulder here, okay, then this would potentially, guys, take us all the way to clear the liquidity from here and potentially from here, guys. So watch, if we break below this, below the neck, watch out for some more downside pressure. As it stands, we may see a short-term bounce in the near term. Okay, next, guys, we get the VIX, and guess what? Okay, the VIX is rising above 25. Okay, that's the main thing here. We are looking at the VIX to go above 25. Now we need the VIX to go above 25 and stay above 25. We had this back in December, went slightly above 25, then went all the way to new lows. On Friday, we went above 25, but then closed below 25. Today is above 25. Is it going to stay above 25, or is it going to close back below 25 and then go to new lows? It's very important to watch the VIX. If the VIX is rising, okay, there's a lot of fear in the market, which makes sense. Okay, it's understandable. If the VIX is rising, then I'm looking to close above 25, see some continuation above 25. And if we do see that, we'll look at the 35 level. The 35 level is a crucial level for the VIX. If the VIX makes it to 35, let's see what happens. Are we going to see some more downside pressure on stocks, or can we get this as a buying opportunity on the stock market? Now, this is something that we need to monitor and see. Remember, the VIX, the stock market has never bottomed without the VIX going to 40 to 50 level, guys. So we don't panic when the VIX makes it to 35, 40. If it does so, we will use that to position ourselves for long-term buying opportunities. And just as I'm on that subject, guys, watch the fear and greed index. At the moment, it stands at 21. If we go below 10 at some point this week, and we will use that, okay, when everyone is extremely fearful, we will be what? We will look to be greedy. Use that to buy into. Everyone is panicking, everyone is selling, we will look to buy. Okay, guys, if the fear and greed, if it makes it below 10, use that, okay, to position yourself for a short-term bounce. Okay, I'm not saying it can go to zero, guys. Yes, it can, but normally when everyone is extremely fearful, opportunities are there for us to take advantage of. Next, guys, we get the dollar, the DXY, and guys, the dollar has been holding very, very nicely here. We broke above the trend line here, and it's retesting it back, but it's holding above it. As long as we can hold above it, I can see the dollar going all the way back to our ultimate target of 109,400 or so. And if that is the case, guys, then obviously more downside pressure for stocks. If the Fed comes in and the government comes in, says we're going to bail everyone out, we're going to start printing money, then the dollar will just lose its value and go to new lows. Now, what I'm watching this daily IC. I don't want to see a close below this. If you see a close below this daily IC, guys, that's it. The dollar goes to new lows and more upside, more upside pressure for stocks. But if that happens, okay, the dollar has been falling along with the stock market. Why? Because everyone is taking the money and putting it into safe havens, which is JPY, okay, the Japanese yen, and gold. And talking about gold, okay, what's gold been doing? It's been going higher and higher. Nice reaction out of this daily IC. We have a nice double bottom here, and we may have a potential target of going back and retesting this daily IC. Why is gold going higher? Because of uncertainties. When so many uncertainties, investors are piling into gold, into safe havens. Okay, so it makes sense for gold to go higher. I still want it to go lower and target this daily IC, but with so many uncertainties, guys, okay, if we do manage to close above this daily IC, then I can see us going higher and potentially clearing the liquidity above those levels here. There's plenty of liquidity resting above there, guys, okay, so that's sitting at around 20,007 or so, so I can see us going up there if we do manage to have a strong week and close above this level here, guys. Okay, so if we close above 1975 for the week, more upside pressure most likely for gold. Lastly, guys, we have Bitcoin. Okay, now we did get some very interesting selling signals over the weekend, okay, which told us that we may see new lows and new selling pressure on Bitcoin. Now we did have what? We did have a bounce from oversold conditions. Okay, so we cleared the liquidity resting here, okay, and then we had a bounce. That is extremely normal. Now, one thing, okay, that I'm targeting now with this new sell signal, I'm looking at those lows here to be taken out. There's so much liquidity resting above there. If you do have one leg lower, clear all the liquidity, that's it. I think that will be the last of Bitcoin, and then we see new highs at some point this year. So I think there's a lot of potential in Bitcoin, especially if we go clear all that below 15,500, guys. Okay, now if we do get close above 25,000, then we will target the daily IC sitting at 30,000. As it stands, guys, okay, if made clear below this low, we talked last week about the potential of an inverse head and shoulders. Now that didn't play out because we closed above the right shoulder, below the right shoulder, apologies. Okay, now all we had was a close below, new low, lower high, and then looking for that lower low as it stands. If we see some more pressure in the stock market, then that will just will follow the stock market to new lows. Okay, so target that, and then as it gets here, guys, just look for buying opportunities. Okay, don't say I'm not saying just buy there. Just look for some interesting opportunities. I think that will arise when the time when and if it does come here. That's pretty much it from me, guys. Thank you very much for watching. Guys, this is going to be a very volatile week, so treat it like it. Okay, don't make long-term bets here just yet. Okay, there's going to be a lot of volatility. We don't know, and no one knows exactly how the government and how this contagion effect may take place. So be very careful, guys. If you do enjoy the strategies that we use, guys, you can go over on the website mcitradingacademy.co.uk, where you can find out more about the mentoring courses that we offer, the one-to-one mentoring courses that we offer, and you can also join our free Discord community. Thank you very much, guys, and be careful out there. It's going to be a very volatile week.